Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
All right, welcome to the U.S. Market Update. Stocks rose as major tech names outperformed to start the week. The Dow Jones Industrial Average added 0.4%, led by a nearly 5% gain in McDonald's, closing 44,470. Good news there for the fast food chain. The S&P 500 gained 0.7% to end at 6,066. Nasdaq Composite climbed almost 1% to close at 19,714. Overall, the market remains jittery on a mix of inflation worries coupled with concern over how Donald Trump's plan for tariffs could adversely affect the U.S. economy. For more insights, we're joined by Sevasti Balafas, CEO of GoalVest. Sevasti, welcome to the show.
Hello. Thank you very much. Nice to be here.
First off, steel and aluminium stocks have popped coming on the back of expectations of U.S. President Donald Trump formally announcing a 25% blanket tariff on all steel and aluminium imports as soon as today, in fact. Are you expecting to see some pullback for the sector as a result in the coming days?
Well, so it ended up being positive for the steel and aluminum companies in the U.S. Of course, it ended up being a bit more mixed for car makers, though, who, their inputs, their costs are going to be rising. So we saw a bump up for the beneficiaries of the steel, those importing steel, but we're going to see, I think you can see a little bit of a reversal as we move forward from here, but we did see a bump up in the steel makers today in the U.S.
All right. We'll be tracking those developments, I suppose, in the coming days. The threat of more tariffs comes ahead of a slew of economic data this week. Overall, Sevasti, how are U.S. investors reacting to Trump's trade tariffs so far? Are they saying yes or no?
Well, so overall, I think it's, the reaction has been better than the first time around when Donald Trump was elected, and there was a lot more concern around the tariffs then. Now it really is an ongoing understanding. Is it posturing? Is it a negotiation? Or is this really going to happen? And we saw a little bit of that even last week when Trump announced, or the White House announced that, even as of the next day, there was going to be a tariff on Mexico and China and Canada, and he ended up pausing very quickly. So I think as we move forward, where some of these announcements are made, but then there's a pullback, and we see there's a negotiation that happens in between. We saw that even with Colombia. There's a negotiation that happens in between. The markets are starting to shrug it off a little bit more. It's not until an implementation actually happens that we might see more pressure on the markets.
Yeah, maybe it's a case of once bitten, twice shy. Now, we know that you've got your eyes on a market rotation that's happening at this very moment, a shift from tech to defensive sectors specifically. The question is, what are the key movements on that front that investors should be watching out for?
So, as you know, the tech in the U.S. has really driven the markets over the last couple of years. And finally, this year, year to date anyway, we're seeing a little bit of a rotation of that. So it's not tech that has outperformed this year. It's actually financials. It's healthcare that are really driving the market. And we're seeing also a rotation not only in sectors, but market cap. So again, not just those mega cap, large cap names, but we're seeing a little bit of a movement in the small cap, like Palantir, for example, which is a company that has tremendously increased in value this year. So we are seeing a rotation from the tech and large cap into small cap. As I said, financials, healthcare are really driving some of the markets. I think it's going to be interesting. We've had earnings come out in the U.S. We've gotten some indication that there's going to be pressure on top line on these companies, but at the same time, the mega cap tech, the hyperscalers, they're still spending a lot of money in capex on AI investment. They did that last year. We're seeing more of that this year. So there's some pressure on, if revenues are coming down, but they're still making those expenditures, are we going to see pressure on the bottom line? So I think some of that is driving the rotation as well.
Yeah, let's touch on Palantir that you mentioned just briefly. In recent days, we've seen the likes of Palantir outperforming. It's the S&P 500's top stock this year. It may keep climbing. What do you think is driving this outperformance? And do you see small and mid-cap growth names continuing to lead the charge in the emerging AI space over the next few years?
So I think it's a couple of things. With Palantir in particular, they're really leveraging AI. They're really leveraging relationships with the government. And as, there's lots of changes in their government that we're going through in the U.S. But one of the things, it does seem like there's a big emphasis on efficiency, and the traditional companies that were gaining the contracts or have longstanding contracts in place, they may not be the ones going forward. And we're seeing Palantir take some of that market share. So I think in the case of Palantir, you can continue. The stock is very expensive, but you can continue to see a run up. So I think part of it is that. And the other part of it could be interest rates as well. Even if we're not going to see the Fed cut rates as much as we had anticipated, let's say 6 months ago, I do think a more stable rate environment helps the smaller cap and mid cap companies. So I think it's just broadening out. Valuations are and were higher on the tech side and the large cap side, and you see more opportunity and lower relative valuations on smaller caps. So I do think there's more potential in the years to come.
Okay, let's rewind a bit to a big data release from last Friday. That was the non-farm payrolls. We saw an addition of 143,000 non-farm payroll jobs in January. The unemployment rate, meanwhile, edged down to 4%. Is that any indication of where the U.S. economy is headed in the short or medium term? And what does this mean for the tone that the Fed will take in the next few months?
So I think, as the Fed has said, they're data dependent, and they are looking at the unemployment rate quite closely and the labor market quite closely, and of course inflation. I think in terms of the January jobs report that came out, so it was a weaker than expected gain of that 143,000 jobs, but this was also offset by revisions that happened in the prior 2 months. So there were upward revisions in the prior 2 months. I think the 4% number is pretty strong, pretty stable. Of course, it's higher than what the unemployment rate was about a year ago, but it's still this historically low number. Of course, unemployment, the numbers can change very quickly if we're ending up going into a recession, but I don't think we're there. I think the U.S. economy has shown resilience, and the 4% number shows pretty solid strength in the labor market. Now, I think the biggest impact or another impact that the Fed has to consider is on inflation and the tariffs. While markets have been shrugging things off for the most part, given they might be negotiating tactics, I do think if some of those tariffs get implemented in a bigger way, and we have had some already, like the 10% on China, but if we get more and more tariff talk and implemented in a bigger way, like on on Mexico and Canada, that we'll potentially see at the end of the month, I think that could have an impact on inflation, and that will influence the Fed more so than the labor market, which I think is showing pretty stable numbers right now.
Yeah, that's a good point. So it seems like tariffs really are the common denominator when it comes to guiding potential Fed decision on interest rates. Well, Sevasti, it's been a pleasure having you on the show. Thank you so much, and have a good week ahead.
Thank you. You too. Take care.
Take care. That was Sevasti Balafas, CEO of GoalVest. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.